Hey, it's Goran with Chicagoland Brokers. I'm shooting this video out for you. I've been waiting for this for quite a while now. Been waiting for these guys to get licensed here in Illinois. This is a great opportunity for anybody that's self-employed, that doesn't show much on their tax returns and cannot get qualified for a mortgage. These guys finally came out, rolled out this loan program where it's bank statement only. So basically, whatever your bank statements show, they go off of that, what your deposits are, and they're able to get you qualified for a loan. Now the interest rates are a little bit higher than maybe by about 1.5% or so above what's standard right now. What you get on a conventional loan. But again, this is a great opportunity for people that don't show much on their taxes. Again, this company is based out of New Jersey. They did just get licensed here in Illinois, and I got qualified with them. I am a realtor, as you know. Um, my bank statements, with what I show on my taxes, I can't qualify to get a mortgage bigger than 100 grand. And we all know you can't buy squat for $100,000 today. With these guys, I'm able to get way over half a million um, approved through them. Now it is 6% or so, and also it does require 20% down. But it's almost as good as the no doc loans that we had before in '05, 2001 to 2005, where everybody was able to get a no doc loan for 20% down. This is the second best thing. I don't think we'll ever see no doc loans again. You never know, but not anytime soon. So if your taxes are not um, showing much, or you're in a situation where your loan officer is telling you, hey, you got to redo your taxes and we need 2 years tax returns, and you don't want to show that much income for your 2 years because that's going to cost you money with your accountant redoing your taxes or whatever it might be, you're better off just paying the 6% interest. Um, so I'm going to let you listen to the video these guys recorded. And again, this is guys that are based out of New Jersey, and they are licensed here now.
Yes, so this is an example of the bank statement program for self-employed individuals. So there's actually a straight business option or a commingled option between personal and business accounts. So what you'll see there is a monthly rundown of the last 12 months. And basically, based on the total deposits and then a expense factor based on a letter from the CPA that says that we ask basically, which you can obviously also derive from a P&L, right? So you'll see the gross income and then the expenses. So what percentage of that gross deposit number goes towards expenses, what's left over, and then what the monthly net income is that we can use to qualify for the loan.
So let's take a step backwards. What we're talking about specifically is allowing a 1099 real estate agent to use bank statements only and not have tax returns considered when qualifying?
Correct.
Right. So this is big because I know a lot of, I sold for real estate for years, and a lot of times I would see deals, you see stuff that you would like to get your hands on if you could, out in the wild there. And this could open a door. Does it need to be primary, or can it be investment as well?
It can be primary and investment as well.
Okay. So right here, I'm looking at these numbers. It shows the deposits, and then what percentage of your deposits get used?
Correct. Based on the expense factor, that would come from your CPA based on your P&L.
So your CPA is going to send a letter and say that you're netting, your expense factor is 50%. So you're netting 50% of these deposits.
Correct.
And then you're going to use that number to qualify them for a mortgage.
You got it. So in this case, you can see that the monthly net income that we can use derived off of those deposits is $10,166 a month. If I used the traditional methods of qualifying this person, their net income was somewhere around $36,000 to $40,000 a year. So I would only be able to have monthly net income of about $3,300.
So this is about 3 to 4x what the tax returns might say, right? Kind of like, yeah, this is kind of big. Now, investment. So personal and investment properties. What And then you go to the normal like debt to income ratio kind of stuff.
Exactly. Actually, the programs do allow you to go even as high as 50 DTI. And on the investment side, you can use the rental income on the property also to help qualify for the deal. And I'm using this example because for most self-employed individuals, including real estate agents, of course, if you look at the cash flow here, if you're a pretty good agent, this probably looks like your cash flow. And what I would also say from an advice standpoint is when you're setting your business up, even though you're an independent contractor and you think, hey, I just got a nice, paycheck from my Remax broker, Keller Williams, what have you, and I just go deposit it in my personal account. That's fine. Just be consistent. Or even better yet, maybe start an LLC to run your expenses through and treat your business as a business. That way, when you go and apply for a loan, everything is nice and organized. But personal is fine. It works well in this equation as well also. But again, make sure like you're not going back and forth. We do have a commingled product, but it does also need that you will have a higher interest rate. And the interest rates on these programs are high. They start in the sixes. I guess it's all relative though, because if you can get 6% money, and like you said, Ryan, astutely, if you find a deal that you want to jump on, 6% money is really not that expensive in the investment world. To just comes to mind thinking about they release some of the loans that the president has with large financial institutions, and some of them are decade-old instruments, and you see the interest rates on some of these things on like 100 million, he's paying 6%. So everything is relative, and obviously you can put those numbers into your equation. And if your net income in this case is $40,000 that you were able to run those expenses through, obviously you saved a bunch of money in writing a check to Uncle Sam. So you have to, obviously you weigh that against what the numbers look like. But I do think most people, especially business people, which this is geared for, will see the value in that.
Okay, so commingled again means you have your business and personal funds rolling through the same account. Ideal is that you have ideal, but you don't need this, is that you have an LLC or something just totally kind of separate.
Correct. So the commingled is actually your personal account and your business account. We're taking the deposits related to your business from those accounts.
Okay. And then your CPA says, hey, it doesn't even need to be the tax return. It's just a letter from the CPA saying, hey, his expenses were about 40, 50%. Okay.
Which you can do on a base, obviously, and that's why I say it's great to keep yourself organized with, QuickBooks. Treat yourself like a business, set yourself up that way. Use QuickBooks, come up with a P&L that will easily show what your expenses are and what that ratio is compared to your gross receipts. Share that with your accountant and ask them to write a letter, based on the actual numbers, which most CPAs are obviously willing to do today.
So there's a little rundown on how these loans are done. Again, this video was shot and they presented this out to realtors, but it's not just for realtors. This could go for anybody that's self-employed that has deposits on account. Truck drivers, service and supply companies, plumbing supplies, contractors. If you've got deposits going in and you're writing off a lot of expenses, you can't get a conventional loan. So they're not looking at what you're writing off. They're only looking at what you're depositing. And then that letter from your CPA just saying, hey, your accountant's going to send a letter to these guys and say, yeah, about 40% of this is profit and 60% is expenses, or whatever you get your CPA to write, that's the number they're going to go off of. You could write, like they have in the video here, 50%. And then you can see in their video, they do have the 50% of $121,000, or actually $243,000, giving them a net income of $120,000. Like on my taxes, like I told you, I couldn't qualify for more than $100,000 loan because I didn't show much income. After all expenses that we get to deduct, they went off of the deposits only. I'm qualified for a much larger mortgage than that $100,000 loan that I was able to get through a conventional financing through other lenders that I use and recommend. So this isn't for everybody, but great for people that are self-employed that cannot get a loan because their taxes aren't showing enough income. Below this video or above, depending on where you're watching this, you'll be able to click a link so you can get more information, or just simply email me or text me at 773-273-9155 if you want more information on this and to hook you up with the guys over in New Jersey to get you started for qualification. And then hopefully we work together. I find you a place, these guys get you a loan, and it's a win-win for everybody. Thanks for listening to the video. Please do me a favor, like the video below, like it on Facebook or wherever again you're watching it on YouTube. Let's get the word out that this is actually a great program, almost as good as the no doc loans that we had back in the early 2000s.